So if you guys have never watched this before, this is the Sunday Prep. I'm Ricky Analog. I'm just going to get you guys prepared for how I'm going to approach the week ahead, right? And it is the kickoff of the earnings season. Last week, or on Friday, we had some of the banks first started. Monday, we have some more banks. But then, we have some big names this week as well. So it should be getting pretty good. Real quick before we start, if you guys don't have a broker you can trust or you are absolutely in love with, trust me, check out Cobra. You will not be disappointed. There is a link in the description. If you use it, you'll get 25% off your commissions. You'll also get a free month of the platform. Do yourself a favor, guys. Spikeet, if you don't know about them, they create a product that allows you to backtest strategies or edges that you may see in the market by pulling historical data on any stock, right? Trust me, I use this a lot. It really helps in so many different aspects, whether it's actually testing a strategy or creating scans. I actually use it as a really neat way to scan for certain types of setups. So link in the description for them as well. Scriptstotrade, these guys make tools for TradingVue and Thinkorswim. They recently moved to a monthly subscription based payment plan, which is awesome because now for like a really low fee you get their whole suite of indicators, right? And if they don't have something that you want, talk to them. They can work with you to create whatever kind of tool you can imagine. TraderVue, I use this for tracking my performance metrics. If you're not tracking your performance metrics, guys, what are you even doing? Seriously, check them out. There is a link in the description for them as well. It's free if you use if you only have 100 trades or less per month. So definitely get on that, guys. And then of course, here's your earnings outlook for the week. Like I said, there's some big names in there. Snapchat, Tesla, Netflix, United Airlines, American Airlines, and it only is going to get crazier come the following week, right? So be familiar with these and make sure if you're trading something that you know if they're reporting or not soon, because you don't want to get blindsided by any of these kinds of things, right? This is your business. This is your job. You need to be on top of your shit, guys. All right. So let's get into the topic. As the title says, why liquidity matters. And as you know, On Trades was asking in the chat earlier, could I talk about ILAG? Well, ILAG is really what kind of brought this topic around. In 2020 and 2021, liquidity, and if you guys don't know what liquidity is, right, we're talking about volume. Like how much volume is trading on a stock. And there are thresholds to what I consider like enough liquidity or too little for me to even be involved in a trade. And I want to talk a bit about why it's so important. So like in 2020 and 2021, liquidity was through the roof. There were stocks, it was nothing. It was absolutely nothing for some of these small caps to trade 100, 200 million, 500 million. And there was a few days where a few stocks in 2020, I believe, even traded 1 billion shares in a single trading session in one day. And, it took a while for people to adjust to it because, I think prior to 2020, 40, 50, 60, 70 million shares a day was pretty high volume. But then people got very accustomed to these really, really liquid names that would just trade insane amount of volume. And then that kind of changed. There's been this lack of liquidity in the market, especially in the small cap world, where if you guys weren't familiar with what happened on Friday, this stock ILAG squeezed, and it had a lot of people that were short, and there just wasn't the liquidity, and it became it was just a halt, and it was really bad. A lot of people that are really close to me got hurt extremely bad on that name, and it sucks. Like honestly, the only thing worse than seeing your friends get hurt like that is being the one getting hurt like that. It really does suck. But the reason I wasn't even involved in that was because I had tried trading it, I think earlier in the week. It might have been Tuesday or Wednesday, and every time I had a position on, it just literally, even when it had selling pressure and would come down, it would just tick right back up on air, literally air. And if you weren't covering into the flushes, it was absolutely insane the way it would just rip right back up, and then you'd be sitting there kicking yourself for not covering, right? And so after I had noticed that, it wasn't worth it to me. I was like, dude, I know what's happening here. I knew what the setup was, and I know what's going on behind the scenes and why everybody was short this thing. They weren't idiots for being short. I saw a lot of people talking about that. And if you don't understand what a liquidation play is, that's not their fault that you don't understand it, right? Maybe you should learn about it. There are legitimate setups there, and there are fundamental reasons why these things get a lot of people short on them. But without the liquidity, it just becomes this really, really dangerous, almost ticking time bomb, right? And here's the thing is, a lot of people will say, oh, if it's not liquid, I'll just size down. Well, guess what? You might size down. Maybe you would normally take 10, 20, 30,000 shares of a pretty cheap stock. Or maybe you even, I'm not really trying to talk size here, right? Maybe you're a smaller trader and you are just trading 1,000 shares or whatever. You might look at that and you might say, well, I'll just size down. I'll just take 500 shares. I'll take half the size or whatever, right? The problem is you don't know about what all the other market participants are doing. Because while you might be sizing down, if somebody else has 100,000 shares and somebody else has 50,000 and someone else has 40,000, they're still going to cause those problems when the stock starts squeezing. And plus when there's lack of liquidity, the other thing you typically see is the spreads get really wide, right? So, something that trades really, really liquid will usually have like a 1, 2, maybe a 3 or 4 cent spread. So even if you're wrong on your idea, you can just hit, if you're short, you can just lift the ask and get out. Or if you're long, you can just slam the bid and get out, and you're not going to have a ton of slippage because the spreads are so tight. But when there's no liquidity, sometimes those spreads can be, even on something like a $5 to $6 stock, sometimes you're looking at a 20, 30 cent spread. That's nuts, right? Because then if you have to get out, you're paying that spread, and you're hoping that not everyone else is doing it at the same time, because it's just going to run away from you, right? And when that happens, then you're forced with a decision. Like, do you just eat a bigger loss than you were anticipating because the slippage you're getting, or do you say those very dangerous words like, well, let's just give it a second and see what happens, right? And I don't want people watching this to think that this is only for small caps, because I trade a ton of large caps, guys. And if you're in TrueTrader, you already know this, but and if you watch the Sunday preps enough, you probably know this too. Like, I don't want to be looking at stocks that trade less than 2 million shares a day. And that's usually the threshold, right? That's usually the minimum. And the reason being is the same. If something's only trading 2 million shares a day, especially if that 2 million shares is spread out, evenly distributed throughout the day. Like some stocks that trade 2 million shares a day, they'll trade, 750,000 of those shares in the first 30 minutes. And then that provides an opportunity because it's liquid enough. We can get in, we can get out. But some stocks don't have that excess or that excess volume in the front loaded, right? In the front part of the price discovery phase of the morning. And they'll have like 2 million shares. You'll look at it and go, well, it trades 2 million shares. I should be okay. And then you look at an intraday chart and you realize that's evenly distributed throughout the full trading day. That's very illiquid. And when you look at those kinds of stocks, you'll notice that the spreads get wide. And, sometimes it'll just kind of grind on you. It's just ticking higher and you're just like, oh, is it going to turn? Is it going to come back? And, sometimes if you have to pull that trigger to get out, you're paying up just to get out of the trade. And on top of that, if you are trading size, you're really screwed, right? Because if you're trading size and you're paying the spread to get out, and there's not a lot of, like I said, if you're short and you're trying to lift the offer, if there's not a lot of people on the offer, you might swipe that offer and still have shares to cover and have to swipe the next offer. And before you know it, and people see what's happening and go, oh, look, somebody's trying to get out, and they just pull their offers. And before you know it, you're kicking yourself for getting involved in something that has no volume. So I really want people to learn the dangers of these low liquidity names and try to focus your energy and time on stocks that trade high levels of liquidity, right? Like, you know, the Apples, the Metas, the Facebook, or not Facebooks, the Teslas, like all these names are so liquid. You don't need to be going and trading some obscure name no one's ever heard of that's trading, you know, 800,000 shares a day. I see people do this. They'll like ask me about a trade, and I'll be like, well, what about the liquidity? And they're like, what? I'm like, well, I mean, you're in the trade, right? How does it feel to be stuck in a trade that has no volume, right? And they're like, yeah, you're right. It's painstaking because you just watch it kind of grind away from you, and you really just kind of feel like at any second somebody could just cough and poof, it just jumps another point on you, right? So make sure you guys understand the importance of having that liquidity so that you can get in, you can get out, and you don't have these giant spreads. And you know, like I said, it's very unfortunate, especially with what happened with ILAG, and my heart goes out to anybody out there that got wrecked by that. It was disgusting, and it hurts to watch. I knew a lot of people that were in that, and yeah, if anybody watching this and you got wrecked on that, my DMs are always open on Twitter. They always have been. I always make that known. But if you guys need somebody to talk to or reach out to, I'm always there for people. So that being said, let's get into the actual prep. I'm going to keep it really short and sweet this week for a few reasons. One, the Chiefs are playing, and two, we're kind of in a dicey little spot right here, and you're going to see it when we talk about the broader market, right? But let's just get into it, all right? So neither I, TrueTrader, or any of the representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about today is a solicitation to buy or sell any stocks. It is simply for entertainment purposes only. All right, let me move some things off this screen so I can see my charts. All right, and I will. All right, let's start with the ES, guys, the broader market, right? And you'll see what I'm talking about when I'm saying that we're in a bit of a dicey spot, okay? Let's start with the monthly chart. And I did want to point one thing out about the monthly, and that is, you know, you see, and the reason I'm using SPX right now is so I can go back to the .com crash. Both times we've had really bad bear markets, the first real test of the monthly 50, we did try to hold it, and we tried to push off of it, right? But eventually we came below it, and we're stuffing, and that's when we really rolled over, right? So you notice, you can see that's where we're at right now. We're into the monthly 50, right? And we're holding on by a thread. We're trying. Will we? I don't know. It remains to be seen. Again, if it's the first time ever watching the Sunday Prep, guys, make sure you understand, I don't ever act like I have a crystal ball, nor do I care to have one. I simply care about being able to create game plans, right? I want to make if-then statements so that I can extract money from the market. So I'm not here to tell you whether we're going to hold the monthly 50 or not, but I am making plans for both scenarios, or actually all scenarios. That's always the plan. Okay, so let's jump into the weekly. Now, on the weekly, what I will say is this. So we did break the prior week's lows, but if you look, you see we reclaimed, right? We also reclaimed the weekly 200, and we're holding this line. Even though we broke below it, we quickly reclaimed. And I mean, if you flip it upside down, this is just like that, what we were talking about in the prior weeks about these failed breakouts and how in bear markets, it's a money machine, right? Spot those failed breakouts and then fade them. And, you know, if you flip the ES upside down, that's what we had. It was a failed breakout that slammed right back under that level. And so there is a good chance that we try to rally from here. But when you get into the daily chart, that's kind of where I start having some concerns, right? So in my opinion, not only did we have the failed breakdown, but the follow-through day was also a failed breakout in a sense, right? It's not what I would call a failed breakout in the textbook definition of it. But, you know, the rally did break Thursday's highs and then immediately just got slammed, and then we closed on lows. Closing on lows is never a good sign. Oftentimes when we do close on lows, and this goes for equities and other asset classes as well, but typically closing on lows and showing that real weakness oftentimes ends in some continuation the following trading session. So keep that in mind. But as long as the game plan for me coming into the week is, as long as we're holding these levels, as long as we stay, I'm just going to call it 35.80, okay? As long as we're trading above 35.80, what I will be doing is looking for higher lows and a trend to develop. And if it does, then I'll start probably looking into the long ideas and using that 35.80 area as kind of the over under, basically my risk level. I think if we break below that level, the game plan then becomes watching to see what happens when we try to reclaim. Do we just bump into it, the underside, and then start to stay heavy and come back down? If so, I think we can fade from here. I don't think we need to wait for pushes higher to fade, right? If we lose 35.80 and on attempts to reclaim it stays heavy, I'll probably look to the short ideas even without, typically what I say in the bear market is you don't want to fade weakness. You want to wait for the big rallies and then fade them. We had the big rally on Thursday, and you could have, and hopefully you guys did fade on Friday. But I think we're going to get to continuation, and I just want to see us break levels and then fail to be able to reclaim them. That's the game plan. And again, if we do that, we are kind of down into that no man's land we talked about last week, where you do kind of have to, and it sucks saying this because I know how it affected me last week, and I'll be honest with you guys when we talk about this, okay? When we get back under those levels and we're in what I'm calling no man's land or whatever, right? You constantly have to keep in the back of your mind, we may have that capitulation day. And like I keep saying, when we do have that day, do not fight it. And I'm not saying it's a for sure thing, but if we have that day, do not fight it on the long side. I know a lot of people see these like big flushes and they want to buy them long for the bounce plays, but if they're not working and it stays heavy and you're wrong, be wrong and be wrong fast, and then possibly flip bias to the short side. And the reason I said that messed me up last week was because, I had that in my mind every single time when I could have been getting long on some names, but I just had that in the back of my head and it kept me from getting long, right? So I did try to get long. I think I posted the chart on Twitter, the Apple trade, right? When on Thursday morning, when we had the market put in that bottom early on in the morning, but I didn't, the tweet I put out was, don't ever let me say this isn't working fast enough, it should have gone already. Those thoughts were creeping into my head because I had that thought about, there's a possible looming capitulation day coming, and I didn't want to be long something if that's what's about to happen, right? So you have to keep that caution always in the back of your mind, but don't let it throw your plan away. If you have a trade plan and something comes into a level and you get long, don't get out of your position until you're supposed to get out of it. None of this jumping out because, I'm worried we might have that capitulation, right? If you have the capitulation, then stop out where you're supposed to stop out and hands off after that, or then flip bias, right? But don't be premature on exits. So let's look into the intraday here, and I'll spit out some levels, guys. Remember this 37.38 from last week? It's still the level, right? And you see it actually. This was Friday morning. Putin made comments pre-market, and I wanted to fade that level, but I wanted it in the regular trading hours. So Putin's comments about Ukrainian stuff that caused that morning pre-market spike really pissed me off. But that level was golden, and it's still a very important level to me, right? So that's resistance for me. Obviously, I don't know if we're going to gap up or gap down. We'll know in a few hours what the futures are doing, but we'll see when we wake up tomorrow, right? If we're opening flat to as long as we're still above that 35, I would say as long as we're above 35.71, which is these lows from over here, right? As long as we're trading above that, and I'll actually just draw it real fast. As long as we're above that level, I will use this 36.40 area as my first level of resistance, right? So if we're gapping up a bit and we're kind of trading right around there, I'm not going to be jumping at the bit to get short into that level. I'd be waiting more for up here in this 37.38 level, right? Above that is this range that we talked about last week. Let me undo that. Did not mean to make it wider. So this range up here between 3,800 and 3,850 is still very valid for me as well. And then above that is going to be that 4,000 psychological round number, annual pivot. Very important level up there as well. Remember that these lows down here from October. Why is that showing as October 2nd, a Sunday? Whatever. These lows down here, okay? As long as we're above that, I'm looking for higher lows and a trend to develop and possibly to get long versus this level. Below that level, I'm using that as possible resistance. I'm looking for it to stuff. And again, if we flush really hard, I'll probably take some bounce plays off of Thursday's low from where we had the FOM, or not the FOMC, CPI. I'll play against those, and just for a day trade, right? Like a bounce play, but not interested in any kind of swing long positions or anything like that. Below 35.70, let's call it 35.71. Really, I want to stay above 35.80. Okay. But yeah, you can bounce above that, but if we get below that, that's that no man's land. Really be cautious of that capitulation day. Again, don't throw your game plan out the window, but if something's not working, admit it, don't fight it, stop out, move on, or flip bias, okay? Let's get into the NQ. It's going to be the same thoughts, basically. Let's look at a monthly real fast. Yeah, so we are still below the monthly 50 on the NQ, but we did reclaim that level, right? You see this level, it's probably much more visual on the weekly, right? This was that kind of that last line in the sand, you know, before we were kind of entering that no man's land, and even though we did breach it, it was a quick reclaim of that level, and then we popped, and we're still above it. So that's going to be the same level as basically that 37.80 on ES. I don't want to misquote that level. 30. I need to look at it daily to see it. 35.70s. Okay, so that NQ level is the equivalent to that 35.70 level on the ES. Okay, but same thoughts. Okay, so if we open flat or small gap down, I probably use this 10.950 area as first resistance. Just keep this over here. Above that is going to be your 20-day and those highs from Friday, 11.250. So definitely that's going to be the major area for me. That's like that. That's going to be the conviction level, is this range actually from right here down to there, in between the 20-day and Friday's highs. Okay, so that's going to be the conviction short on any kind of parabolic spike up into those levels. Okay, again, that doesn't mean that it's like get short, swing it, and don't look, and don't manage risk and don't look back. That's where the trade ideas become very desirable for me. That's what I mean by that. Okay, obviously above that, then you have that monthly pivot. It's basically just another range, right? This range up here is the next conviction level for me. What is it? 11.680, between 11.680 and 11.780. Okay, so a little 100-point range right there on the NQ. Anything up into those levels, again, would be another area where I'd look to fade things. On the downside, obviously this level here was the one from way back that we reclaimed, and as long as we're above it, I still think we can look for higher lows and a possible push. But below it, remember, just like with the ES, I'm looking for it to try to reclaim and stay heavy and not be able to reclaim. If that happens, the only remaining level to play along against, and only for a bounce, not for anything more, would be those lows from Thursday, right? So, and then again, below that is buckle up, make sure you're not fighting on the long side, because who knows, that could send us into that capitulation. And I hate to just overuse that word, especially because it's being thrown around left and right on all the social media, especially FinTwit. But just make sure you guys understand that, like, there could come a point where people just, everyone at the same time throwing in the towels, everyone piling in short, and just, you know, you get that big 2 standard deviation move or even larger move that just catches people off guard. So make sure you're not caught off guard. That's all I want, is for you guys to stay safe. And if you guys take anything away from any of these Sunday preps, that's really it, guys. Is create game plans, if-then statements, and stick to them. Have extreme discipline, and you will be able to stay safe. You won't be able to avoid losing on trades. Losses happen, but you will never have to worry about blowing up if you can just stick to your rules, create game plans, and don't deviate. That's what the takeaways should be from these Sunday preps, okay? Bitcoin, I actually kind of wanted to say a few things about Bitcoin this week that's more than what I typically talk about on them. Again, it's still in this range. It's still just heading sideways. The weekly 20 is definitely getting closer and closer. So I think, we're getting close to go time, whether it's higher or lower. Once we get to this 20, the weekly 20, I think we're going to see a move one way or the other. But what I did want to point out about it was we breached that level we talked about last week ever so little on Thursday, but it was a quick failed breakdown, a quick reclaim. And regardless if we have a little short continuation trigger here by losing 18,983 below that level. Let me just draw a little line here for you so you guys can visualize. Below here would be a little short continuation trigger, which should take us back to lows. But if we get that and it fails, this right here above Friday's highs could actually ignite us to the upside. Okay, with that little failed breakdown there and this holding, I really think you guys should be watching above Friday's highs, which I'll give you the levels here is 19,954.14. But really, like when we're talking about a $20,000 asset, the pennies don't matter quite as much, right? But over those Friday highs, I think this could actually ignite a move higher. I don't know if it's going to get a real move going, but I definitely think it could get you up to that weekly 20, which is currently in the 22,000s, right? So, and if you trade the equities, you need to know this as well, right? Because if that happens, if this gets over those levels and it does create that move up, watch the things like Coin, Riot, Mara, etc., right? So that's just what I wanted to add a little color in on Bitcoin. And then let's look at our sector analysis, okay? Real quick, hit the ETFs up. Here's bar chart. Let's go back to the stock market sectors and look at the matrix. Like Neo, right? All right. So obviously a lot of red, right? We saw how last week you had the Thursday rally, but it gave almost all of it back on Friday. So the note I made was this: if you go through, and we're about to do this, but as we go through the ETFs, the thing I feel like you should be taking note of is which sectors gave the least amount of Thursday's up move, that rally, which sectors gave the least amount of that rally back on Friday. Because that to me is saying, like, look, there was a bit of, these had relative strength in comparison to the other sectors. And so the one I was going to say was to pay attention to is you had this green sticking out on consumer staples, sticks out like a sore thumb, right? Remember what I always say is we need to look under the hood. Let's go look at the actual ETF in the sector and see what we find there. I'll just start there real fast. I just want to point one thing out about them. So this is why did I click there? Here you go. Here's your consumer staples. Now here's the thing. It gave quite a bit of Thursday back, but the thing I don't like about it is that it didn't hold this level, right? This 68.27 or 26, whatever it is, okay? 68, I'll be exact for you guys, 68.22. It was not able to hold that level. And as we go through some of these other sectors, you'll see some of them did hold those key levels, right? So let's start with retail. And you'll know it's the one that I think held it to the T, maybe a little bit below it. But it gave quite a bit of Thursday's move back, right? So if we come any lower on Monday or even Tuesday in this sector, this thing could really get rolling over, right? This is some of these levels, you can probably equate them to the ES and the NQ levels that I gave you, right? Where it's like above those levels, you might still have a chance at looking for an uptrend to form, higher lows and something to define your risk. But below those levels, and you kind of have to watch to see, do they stay heavy every time they retest from the underside, right? XLF, this is one where I feel like relative strength, but keep in mind, why did this one not give so much of the move back? Because on Friday, a lot of the banks had earnings, and a lot of the banks have earnings on Monday too, right? So take that with a grain of salt. But again, if it does continue to hold these key levels, these are the sectors where I think any kind of long ideas should probably be focused. Real estate, ugly as hell. Never reclaimed anything, even with the Thursday rally, right? It's been just getting slaughtered. When I say that, I guess I'm kind of skipping ahead, right? Like, hopefully you guys get my bias from that. I'm short bias. I don't play in the sandbox a lot, but you know, we weren't able to reclaim that level. I don't see any sort of bull thesis here. So hopefully I don't always have to explicitly say that my bias is one or the other. Hopefully you can kind of glean that from the way I talk about the price action. Healthcare, I thought this sector did well in holding levels, okay? I thought this was, it did not give very much of that move back. So I am looking at this as one of the sectors where as long as we continue to hold, there is that chance that this was just a failed breakdown here, a quick reclaim, and then we might get some long setups, okay? Building or materials gave a lot of the move back, still looks really weak. Like the levels that it pushed up into, right, were really just a retest of these major breakdown areas, right? So still think this one's pretty ugly. Industrials, I think this one, it's ugly. It didn't hold that level, but you know, I would keep an eye on names like these, like not only this one, but like retail too. Obviously, keep an eye from the underside if they stay heavy, but also watch if they reclaim, okay? Monday morning, watch if they reclaim these levels and then stay strong above on retest from above, okay? You'll get your clues from that because you want them to hold those levels and then you want people to agree with you, meaning they're also stepping in and buying because they see strength. Utilities, this is the one that was oversold. I still think, like, if you were trying to look for oversold bounce plays, this sector is probably the sector to look in. Again, not my favorite sector to really trade around. Slim pickings for names that have liquidity, remember. But there are some, okay, like Dominion, Duke, XEL, there's a few. XLP, we already talked about this one. Remember, even though it had in the stock market matrix or whatever here on bar chart showing that, you know, it had a decent week, the chart disagrees in terms of being able to hold key levels. Now again, things can change. If we reclaim that level and start to get strong again, can always adjust your bias, but definitely watching on the underside for that to stay heavy, okay? And this is a sector that has names that are tradable, that have liquidity and range. Discretionary, this one is still holding key levels, but it gave a lot of that Thursday move, that Thursday rally back, right? So that's not really showing me a lot of strength. These things start breaching the lows from Thursday, and watch out below. That's kind of my opinion on that. Communications, still think it's, I don't want to swear, but dog trash. Still think pops into levels are just perpetual shorts in this sector until things change, right? When things change, when we start seeing reclaims of like the 20-day and higher lows and levels holding and a base being formed, like this whole, I don't know if I can draw, let's see, I'll just use this. This whole area here was when it started looking good, but it just failed when it ran straight up into these levels here. It just couldn't even get there, and then after that it was just lights out, right? So when you see this kind of stuff, that's where you can start to say, okay, maybe let's look in that sector to see if other individual names are starting to set up. But you know, once this rolls over and breaks, and you know, that's the kind of thing where people get in trouble, because you know, you get this you get attached to an idea and you go, oh, but I really liked it, but objectively, look, right back under it, it lost this level where it had broke above, and then on the retest from the underside of the 20-day, that stuff that should have been a huge red flag, right? And then every subsequent stuff or push into the underside of the 20-day just sends it lower. So what did we just do on Thursday and Friday? We pushed into the other side of the 20-day. things got to change first before you can start looking at sectors as though they have some sort of strength or long opportunities. I think biotech still looks okay. It did give quite a bit of that move back. I do still think dips down into the 75 area might offer some long opportunities in this sector. Tech's ugly, especially the fact that on that Thursday rally, you know, it was right into the underside of really big resistance, and it just never got back above levels. And then obviously the big sell-off on Friday. So tech, obviously levels below this. What is this level here? We'll call it 109.50. That's kind of that last man's or that last stand level, right? Below that, you got to kind of really get cautious on what you would be willing to have long exposure on. Energy and oil, you know, obviously they had the big rally. They stuffed those levels again. You know, I was happy to get that fade from last week. We actually had some nice shorts in the energy and oil sector, straight from last week's Sunday prep that we talked about. And again, I think, you know, the inability for them to get back above levels and push is showing that they may end up coming back down and retesting this lower trend line. And, you know, you just kind of have to, I wouldn't short the weakness on them at all by any means. Like where energy and oil are currently trading, I wouldn't be interested in shorting. I would be interested if come Monday morning or even Tuesday, right? Like it could come in a little bit more on Monday, but on Tuesday or Monday, if these things were to push back up into undersides, like, I mean, this quarterly pivot really lines up pretty damn well with where this thing rolled over from, which was here and here, right? So these levels, if we push into the underside of those and we stay heavy, that's where you get your opportunity to position short. I don't want to be shorting the weakness on these kinds of names, okay? Same with this oil sector here. These are the levels that when they cracked, that's what sent us tumbling down, right? So those are, those are the important levels for me. Is pushes up into the underside of those, staying heavy and putting in lower highs and just inability to have any sort of sustained momentum. That's where I start looking for shorts in energy and oil. If they flush, these are the kinds of sectors where there's definitely long opportunities, okay? 100%. Don't think that I'm only bearish energy and oil. If they come back into levels of support, I think there's really good long opportunities here still. Again, we've talked about this. When we finally do start to lose this really beautiful textbook uptrend, it's going to be very clear. It's not going to be, you're not going to have to wonder, like, is this uptrend over? Now, you know, that we're seeing signs of an inability to get back to highs doesn't mean we can't. We are just, if we zoom out into a weekly or a monthly, you'll see this is just kind of coiling up, right? Just kind of getting nice and tight. Even though we're making lower highs, we're making higher lows. So until one of those sides breaks, you kind of just play both sides, right? You play the shorts into the resistance, you play the longs into the support. All right, so that's pretty much it for the sector analysis. Again, there's not a lot of names on the individual names list because of what we were talking about. Uh-oh. What did I do? I'm sorry, guys. Sorry. I was not clicked on my charts. I tried to type a ticker in and it ruined the stream. All right. But what I was saying was the reason there's not a lot of names, right, is because typically when it's strong stocks that I'm looking for continuation in, you know, you got to have some nice chart setups for those. There haven't been a lot because of where the broader market's at, and a lot of people are just kind of like, I think, very hesitant to get caught off sides, right? I remember Thursday when the FOMC, or Wednesday when FOMC happened, the move was really muted, right? It was like people were like, oh, what a boring FOMC. Well, what did people think was going to happen? Like the very next morning you have CPI, right? Do you think people are going to position one side or the other and really have exposure with that gigantic event the next morning, right? So I thought it was really silly for people on social media to be like, I can't believe how boring FOMC was on Wednesday. Like, duh. Anyway, because of where the market's at, it's, you know, I'm very cautious about having a ton of names on watch. Also have a lot of names with earnings this week, so I don't need to have a ton of ideas. I'll let the earnings numbers come out, create the excess range in the names that have the liquidity, and I'll trade those. Like I know I'll be trading Tesla and Snapchat and Netflix and UAL and RCL. So like, you know, I don't have to have too many names as focus names. But I do have some, so let's get into it. The first sector is strong stocks looking for continuation. The first name on my list is Boeing. And basically, obviously people are like, what do you mean strong stock, right? It's not a strong stock. But in terms of, did it give a lot of that Thursday rally back? No, it didn't, right? The big Thursday rally, and then Friday, that's all it gave back, right? It held. It even closed above the 20-day. So what I'm looking for this is 128.30 is what I wrote down is where I want to scoop this. I don't have any alerts set right now. You see the annual pivot, right? 128.40, and then last week's weekly pivot is 128.13. But look how many times those levels got tested, right? Every time, almost holding to the T. And you can't look at this and be like, well, look at that. Well, that was CPI, right? So that was a binary event. Reclaimed. Once it reclaimed, look at what happened. Here's your pullback right here on the rally day. Pulled back right into those levels and then went. So any kind of flush down of those levels, I think we get a good bounce play there. And I do like the fact that it gave so little of that rally back. Now, here's what I do think. If it is strong, it's actually probably less likely we get that flush. So, you know, the other way to play this would be probably look for a break above this 134 area, which is what kind of kept a lid on it after it did sell off on Friday. So if it reclaims 134 and starts making higher lows, you might be able to get a trend to join on this, okay? So that's Boeing. And then only other name on this list is Cardinal Health, CAH. And this one, it's funny that we talked about liquidity today. There's a few names. There's actually 3 names on my list this week that are on the lower end of the liquidity spectrum but they all meet my threshold, right? Like they're all over 2 million shares a day. So for that reason, they're on my list, but the chart's got to be there in the range, and it has to be there as well. So like you're talking about $70 stock, it's got almost a $2 range. There's definitely money to capture here. What I like about it, one, the sector. Remember XLV? We said stock or sectors that didn't give back a lot of the move on Friday are sectors where if I am going to get long, it's probably going to be there. So Cardinal Health, I do like it. I like that it's pulled back to the 20 and the 50 and they're both kissing, right? You see how the 20 and the 50 have just pinched together like that. A lot of times you see that right before an explosive move. So that's what really caught my eye on this. So basically what I'm looking for is, I think over 68.75 is what I wrote down. Let's go look. Yeah, basically I just want us to clear, again, just like Boeing, what I said of Boeing, right? Those levels where it was rejecting before it did give back some of that move on Friday, I want to see us clear that level and then higher lows. So that's kind of the way I'm looking at a play on Cardinal Health. Now, this wasn't in my list, but I am going to give you 2 other names in this sector that I like. One is Gilead. Again, you got the 20 and the 50-day pinching right there, and we're just holding above levels up here. We didn't give hardly any of that move back. So I'd be looking for this one as well. Even if this one doesn't work from here, I think set alerts down here at your 20-day, because I think pullbacks to that are going to hold for a little bit. I think it's getting ready for a move. And if it doesn't, don't DM me and tell me you're mad. The other one is Merck. I believe it was Merck. Yep. And both, again, you got the 20 and the 50-day. 20's creeping up on it. It's holding the weekly 20. Now, the one thing I don't like about these charts is the failed breakout on Friday, that candle. When you see these kinds of candles on these big pushes, a lot of times you have a fade. A lot of it comes back in. Now, the only reason I'm, taking that with a grain of salt this week is because every chart out there is going to have a Friday candle similar, and in fact, most are much uglier, right? Because a lot of the charts out there gave way more of that Thursday rally back than what we're looking at here on Merck, right? But just throwing Merck and Gilead in there as a bonus. Cardinal Health is the one I like, but Merck and Gilead have better liquidity, right? So if you want to be able to take more size, those are going to be the names that have the liquidity to do so. The thing I like about Cardinal Health, though, is I think that this could become a swing trade. If it closes strong and you locked in profit, you could leave a runner on. I think if this is going to go, I think this setup up here could give us a bigger, like a big leg up. Obviously, you have clearly defined risk, right? Like if you were looking swing on this under these levels, under Friday's low or Thursday's lows, that's where you're wrong. Okay, so say you put this trade on, maybe you get a flush into the 20-day tomorrow morning. Okay, say you buy this at 68 and you sell a good portion of it into a high day push or something, right? So into the 70s, and you leave a piece on. Make sure the piece you leave on is position sized correctly, so that if we lose Friday or Thursday's lows, your loss is a controlled, pre-planned, normalized loss. Okay, that's how you have to do that when you put on a day trade where you're possibly going to leave a piece on for a swing. All right, so that's it for all, like usually I'll do oversold reversion setups. There's obviously the utilities, right? The thing with utilities is because of the big rally on Thursday and the way that Friday gave a bunch back, the only way to really play these right now is you play them as though Thursday's low is your risk level. So if you wanted to trade like Dominion or Duke or XEL or any of these, you're basically trying to find levels where you feel comfortable buying it with risk under Thursday's low. So let's look at Dominion. So for instance, if I wanted to get long Dominion, my stop's going to be underneath 61.70, or at least that's where I'm wrong at. Below that, I think we could just go lower, and I don't want to be fighting it, right? So if I wanted to get involved in this, I'd probably be trying to buy it into a flush into 62.70s or something with about a point of risk. And I don't typically like to have a point of risk on a $60 stock, right? But depending on if it flushed there really, really emotionally, and I saw what I needed to see, I would probably look to get involved. And the thing is say we flush 62.60, and you see what you need to see. If you see like a whatever time frame you guys trade on, right? If you see that wick down and then a candle close strong, then maybe you don't need your risk under 61.70. Maybe you just put your risk under the low of that candle that was the reversal candle. Hopefully you guys understand that, right? All right, so that's it for the longs. Let's move on to the short setups, weak stocks where I'm looking for continuation. I want to preface this with, I could have almost picked any stock out there this week. Anything that has volume and range is almost, they all look like possible shorts, okay? It's absolutely insane out there. I'm trying to just throw a few ideas out there. But again, I'll be playing the scanners and the earnings names as well. So there won't be any shortage of trades this week. The first name I'm looking at is GE. I'm looking at a pop into the 50-day slash this breakdown level here, right? So 61.20 to 61.70 or 61.60. Somewhere in that range, I'm looking to fade a pop on GE. I'd prefer it to be like a fast emotional move up into those levels, but this is the type of name that maybe if it just kind of grinds up there, I would still look for a setup with lower highs and something to risk against for a possible unwind and maybe even a swing short on the name. The next name is RCL. And this one, so I have this and UAL, and I know that like they're both travel names. Obviously, one is airlines, one is cruises, so I don't feel too bad having them both in here, but I like both ideas, and you'll see why. So RCL, I'm looking for a pop towards 45, I think I wrote 45.60s, yep. So anywhere up into these, you see these levels here that just kept topping, right? If it pushes up in 45.60s and stays heavy, I'm probably looking to fade this. Probably looking for it to give back quite a bit of this move up. The weekly is what really has me thinking that this is trying to give us that short continuation on the weekly, which we talk about all the time. If I can find, let's just So you get the push up into the underside of the weekly 20, the pullback, the lower high, and then if we break these levels here, that's where we come down, and target would be these lows, right? So if that's what's trying to materialize on the weekly chart, then I definitely want to start getting involved. Whoops. Yeah, I definitely want to start stalking it now before that really starts rolling over. I'd like to look at positioning for that on an intraday basis, right? This alert, ignore this alert up here. I think that was from previous weeks, okay? But remember, 45.60 to 45.70 is the level I'm looking at. If we break under, break under Friday's lows, and maybe even wait for it to break under this that rally, Thursday's rally day, where it had that major pivot on the pullback. Underneath those levels, I'd probably just look to start shorting pops back into the closing price, okay? So two different ways to play RCL. The next one is UAL. Now, UAL, keep in mind, has earnings after the close on Tuesday. So this idea is not for carrying into the numbers, right? That to me is always a gamble. But I love the fact that this rejected where it did on Friday. So basically, I really want to play this on any kind of pop back into the underside of the 50-day and use Friday's high day as like basically my risk level. So interested to see where it opens, right? Like, do we gap up, gap down on the broader market? And if we gap down on the broader market, I might even be looking at 36s as the fade on this. It just depends on where it opens, right? But right now, as of now, I'm looking at the 50-day. 36.50 is where I want to see it stay heavy. Okay, so that's UAL. And remember, earnings on Tuesday after the bell, so don't get caught. The next one is PANW. This is one of the ones I was telling you, not the most liquid name, but it trades 3 million shares a day. We're okay. What I noticed on this, look at this chart. It looks much easier to see on a weekly. Look at this big old head and shoulders here. There's a big push up. This shelf that's been building here, the big old major move up that failed, came back, retested, held those levels, and then this long trigger here that put in this right side of the head and shoulders, that was the move for the longs in terms of like the position traders and the investors and stuff. That was the move that everybody wanted and needed to get back to highs. And when that fails, that's where you get the failed long trigger creating the major short trigger, right? And so I think that this could actually be a swing trade. And I don't typically put swing short trades out there. This one, I'm willing to give the idea out there. Remember, you make the trade yours, guys. If a trade works, don't congratulate me. Congratulate yourself. If a trade doesn't work, it's not, I don't want DMs or hate mail. Own it, okay? But the idea, I think, is good. And what I'm looking for is a pop into the 20-day, and I'd kick it over 179. I think if you get a pop into the 20-day over the next few days, you're getting about 3-1 on this trade, because I think this could easily come and fill this gap. This gap is just glaring down here, right? Obviously, we need to lose these lows right here, which tested twice, right? So here, well, actually, it never tested here because that was the gap up day from the earnings. But after here, it did test on earnings. I think, pops into the 20-day, I'd be looking to put a piece on with the thoughts that we can come down into the 125 range, okay? I'm gonna see. I want to read my notes on it. Just make sure I didn't have a day trade idea on it. No, it was all swing. Okay, so it's rare that I'll put a swing trade on the short side out there for people, but we are in a bear market, and I think it makes sense. And I like the company. Like, I've always liked Palo Alto Networks as a good long. In fact, I had a really nice trade on it from the March 2020 COVID stuff. I've never swung this short, so this would be a first time for me on this name. But a trade is a trade. I don't care about the name or the ticker. It's just the idea. Okay. Next idea, McDonald's. I love that it rejected where it rejected up into the underside of the 200-day. It's also the weekly 20. You got the curling down 50-day up there. Obviously, a trend line. If you guys know me, trend lines don't mean much to me. They're visual guidelines, but it is nice to see when things slam up into them and reject like that shows me that people were looking at the same thing, right? So what I'd be looking at for this on McDonald's is 247. Any pop back into 247 has my attention. So look, push up. Here's your failed breakout, and the level that it broke to get down was right here. Okay, so any kind of spike back up into these levels, I'm looking to fade McDonald's, and I would kick it over. Again, most of these ideas would be risking versus Friday's highs. Okay, Square. It's been on my. I swear I've had Square on the short list every Sunday prep for a while here. 5650 is what I wrote down as my level for conviction. Let's see. Look at this rip here. Right here. This is where that push off the 5-minute 20, failing to get any kind of anything going there, that was the level, right? So any kind of push back up into that level. Not only that, but look, it lines up, okay? Just draw it straight across. You can see that's been the level. Failed breakout, slam back under, any kind of parabolic pop back into 5650, I'm fading on Square. It's a day trade. It's not something that, it's not like McDonald's or I'm sorry, Palo Alto. But the liquidity and the range on Square makes it like a daily driver, right? Things like Square, Rivian, Roblox, Roku, you know, Meta, AMD, Nvidia. Those are the kinds of names that I trade almost not daily, but definitely weekly, right? Because they present opportunities, they have the range, and they have the liquidity. All right, and the last name on my list this week, guys, is CHWY. Okay, let's see here. Again, love the fact that we just gave that much of Thursday's rally back on this name, right? 35.30 is what I wrote down for a fade, but if it gaps down, I'll be looking to fade any kind of pop back into the closing price. So, what did I say? 35.30. Yeah, the monthly pivot basically. And oh, I see why. Not just the monthly pivot, but again, draw your lines, guys. These pivots are great. They're not. They're you know, it's not magic. They're created based on important historical levels. This blue line is a monthly pivot, right? So it's a math formula based off the previous month's monthly candle. You guys need to understand at least what the hell your indicators are telling you before you start putting any sort of beliefs in them, right? But even without that, if I don't have that monthly pivot there, I still have that level. Look at the way it spiked up into it and failed. And if we draw that line, like I said, look, support, resistance. Support becomes resistance once we crack it, okay? And it's also been historically, like just like with Square, right? Draw it across and you can see it's been an important level. So that's the idea on CHWY, and that's the Sunday prep, right? So I'm gonna look and see if there is any questions. And I'll get to the questions real quick, and then I'm gonna get back to my football game. Dan Kircher says ETF volumes at all-time highs. So again, even though they are, that's not really what the point was, right? Like I'm just saying, make sure what you trades enough liquidity, right? And when I was talking about there being a lack of liquidity in the markets, we were talking primarily small caps. Cruz says, "I'm your utmost expert. In your utmost expert opinion, when do you think AMC will delist?" Oh, I want to show everybody a trick Cruz gave me. Watch this. You can type AMC plus 8, and it gives you a aggregate price. I love it. So thank you for that tip. I don't know if they'll delist. They'll probably do it if and I don't want people to attack me with this. If they do anything, it'll be a bankruptcy, which is a Chapter 11 restructure, and that just pays out the creditors, right? And usually the equity holders get hosed, but the company still exists, right? So AMC will still be a theater. You'll still be able to see movies there and shit, even if they go bankrupt, right? So I hear people all the time saying like, oh, you're trying to destroy the company and put them out of business. Like, no, even if they go bankrupt, they'll still be in business, guys. So there is that. Yogi, what's up, my brother? He says, XLE, I might actually take a long at 78.30s. Yeah, it's pretty close to where I have that line drawn too, right? Which is he's looking at the 50-day. And again, like I said, I think on pullbacks to support, energy and oil have lots of levels where you can play with defined risk, and you know that money out there is looking to get. There's a lot of people out there that only trade long, right? And so if you have all this money out there that needs to be put to use somewhere on the long side, people got to pick where the charts look the best, right? And energy and oil still are the only real sectors that have bullish charts, right? Uptrends. Everything else, everything else looks like this, right? I just inverted XLE. So if you flip oil and energy over, then they look bearish. But every other ETF or sector, their charts look like this already, right? So if there's all this money out there that needs to be put to use on the long side, where do you think they're going to put it? They're going to put it in the sectors where they think that there's a chance that things are still going higher. Obviously, there's people that are dollar cost averaging into things. People are upside down on a lot of stuff right now. To each their own, right? Like, I'm not big on that. I'd rather wait for, look at oil was in a huge secular downtrend for a very long time, right? And we've talked about this. This right here, I don't want a dollar cost average into this. I'd rather wait for this. I'd rather wait for the chart to change, and then you can just ride the momentum for as long as the bull trend stays intact. Especially for when we're talking about long-term positions, IRAs, investments, anything that's longer term. Okay, not investment advice. Remember that, guys. What is my Dan Kircher says? What's your take on SLB and earnings on Friday? Continued move to the upside ? Or proxy for energy uptrend. Honestly, I think because it's in the right sector that the money's still gonna flow. I feel like I just kind of addressed that with Yogi's thing, right? But the money should still flow towards those sectors. And I don't have a crystal ball, so I don't know what's going to happen with the numbers, and anybody that can say they know is lying. But I see levels, right? So as long as it holds above key levels, right? Even pullbacks to the 20-day, which is also lining up with the 200-day, the 50 days right there. You have your weekly 20, and this is a chart that I've had these drawings drawn for a long time, right? This is a very nice chart setting up. Right, so this really, really could get going. SLB, it's pretty textbook there, right? If we get over certain levels, this could really get going. But again, it's going to depend on that sector, energy and oils, having continuation to the upside. Let's see, David Worrell, Ricky, AEHR. Would love for you to look over. My idea is if it holds its trend line, I would like to get long at this low. All right. My guess is that the trend line you're talking about is something like this, right? Somewhere in here. Again, for me, the problem with this is the liquidity. I can't trade it. If you're talking about a swing trade, I think you're fine because you can. Swings are way different. And make sure when we talked about the introduction topic about liquidity mattering, it matters mostly for trading. It does matter somewhat for swings when you really start talking about the lower liquidity things, right? Like if you're talking 500,000 shares or less per day, you got to consider that when you're deciding how much of a position size to take. There's some stocks out there I see people talk about that are less than 100,000 shares a day. To me, that's crazy, right? But you can swing this. Let's see what the average volume says here. Actually, the 10-day volume is 2.5 million, but it doesn't typically trade 2 million shares a day. It just had some high volume recently because of earnings or whatever, right? So that skews the 10-day average volume. But again, yeah, if it holds this line, if it holds this trend, I think you're okay. What I would look at is I would just see. Yeah, I would be saying 14 over under. That would be my look at. I would not want to stay long this under 14. As long as dips to 14 or a little bit higher continue to get bought up. And as far as, and I'll tell you this much, what sucks, at least from my standpoint, with having the CPI rally day and then the Friday give back, is it's not, you know, your typical organic movement. It's elevated volume, elevated range, and it kind of ruins a lot of what you're looking at in terms of a trend. But you definitely have like a little level here where we get over certain levels. So just from a technical standpoint, right? Here's your pullback. Push up, high or low. What you need to see break is this level here. So over 1770 should get you back to these highs in the 1930s, but again, you would be anticipating the break of that to really send you back up into these 20s, okay? And that's just straight up nothing more than looking at how stocks trend, right? You've reclaimed the 20-day, you got the 50-day in an uptrend. We're trying to hold trend here, but again, under 14 and this thing could really fall apart. So that any kind of dip buys here is anticipation of the break of 17. Let me give you an accurate level, 1770, right? So buying it down here in the 1450s, 1460s with risk under 14, you're anticipating a push back up into the 17s and an eventual break of that level. If you want confirmation, you got to wait for the break first, and then you want to buy dips after that. Just my opinion on AEHR. Hope that helps. KH is asking about mRNA the other day. It went up so much, then dumped the day after. It was up 15% pre-market. Yeah, mRNA had a really crazy day that day. The pre-market move on this Wednesday move is what I think you're talking about, right? And I saw that, and that was, to me, that was a nutty move on mRNA. It was a really good fade as well. I'm not sure if there was a question in there about it. I think it was just, I mean, yeah, I just agree. It was a crazy move, but again, it's we talked about it last week as well. It's still holding these key levels below those levels, and it really could get ugly. But again, we don't know if it's going to break them or not. And if it was to start forming this uptrend here, I think you got possible dip buys in those levels. Tesla, we may see 180. That FSLR won't die. I don't know what you mean it won't die. It's definitely rolling over here. You got to understand, when you're looking at a weekly chart like this for this trade, the idea was to fade up in here in the 138s with looking for a move back to the weekly 20. When we're talking about a weekly chart, you have to understand this doesn't happen overnight, right? In fact, like this move down from here to here, right? Count how many weeks that was. 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, it's almost a 10-week move. We're over here, we're just now breaking. So it's like week number 1. You know, this could be another 3, 4, 5, 6 weeks till this kind of makes its way down to the target, if it's going to make it to the target. So just understand, like, these higher time frame ideas don't play out overnight. It's not a day trade, right? Pooja Patel, hi Ricky. Outside of paid services like Benzinga Pro, any websites or apps that you'd recommend for quick stock news? I've been exploring Yahoo Finance, Finviz, Stock StickTwits. Maybe you meant StockTwits or MarketWatch. No, Benzinga Pro and like their Squawk is what I use. They're everything that's worth anything that's going to be valuable is going to cost money. Okay. And listen, you have to treat trading like a business. You absolutely have to invest in your business. You need to have, especially if you trade. I mean, I don't know if there's anything you could trade where you wouldn't need news, except maybe swing trading possibly and investing. But like if you're a trader, you got to know the news, right? The only free option where you might be able to find things quickly is Twitter by searching the cash tag, but if you're searching on Twitter for a cash tag because you need the news on something, it's most likely because you saw it move big and now you're searching for why is it moving big. Whereas like if you have Squawk or Trade the News where they have like audible calls on news as it's hitting the wire, you can be pulling that chart up as the move is just starting, right? And you already know the news. So like you really kind of do have to invest in yourself on those. I know it sucks. Nobody likes to spend money, but it's a business, right? McDonald's doesn't get upset that they have to buy a metric shit ton of hamburger buns. KH says, do you trade SPX options? Also, what is your thoughts on Twitter? Should I buy? No. Listen, Twitter is, you had your chance to get in Twitter for, a long time. Up here where it's trading now, I understand the arbitrage idea, right? Like, you're basically making a bet that Elon gets the deal done and that he gets it done at that 54.20 price. Somebody actually tweeted the other day that it's actually like one of the best risk reward scenarios ever for a reverse arbitrage trade, meaning you're taking the short. He's like, yeah, what's the downside? Is like 7% from here, right? You could short anywhere in the 50s. Worst case scenario is you're losing a few points if it gets bought out at 54.20. Best case scenario is it doesn't happen and the thing plummets, right? To me, that made a lot of sense. I was like, that's really freaking smart, because I wouldn't be buying it up here in hopes that he gets the deal done and you make a few points, because any day, any headline could just rock the thing, and we've seen it happen plenty of times, right? Like, just look right here. Like, these were headline-driven things where the deal was not certain. So, yeah, I don't... And as far as the options go, I do trade some SPY options and some options of liquid large caps, right? Like maybe some Nvidia, some Tesla, Apple, but I trade them the same way I trade the equities, right? So emotional moves in the levels, and so I'm not the guy to talk to. Actually, Cruz is in the chat. He's the guy to talk to about options trading. Actually, we have a guy in our room as well, options trader or options Mike, and he's really, really good too, and puts out a lot of content in the community for the options guys. Javier says, thoughts on KR short and 45. Dude, you know what's funny is like the big spike on the Albertsons buyout or whatever rumors. I couldn't believe how much of it gave back on Friday. Yeah, it probably is a good short on a pop back into those levels. I mean, that's a good eye, Javier. Thank you very much. And obviously, it's part of the consumer staples sector too, which we talked about had lost this level, right? So if on Monday you see staples pushing up into this resistance level and staying heavy, go look at Kroger, right? Go look at Kraft Heinz. Go look at Coca-Cola. Go look at some of the names in those sectors and see if there's some trades for yourselves. All right, so I think that's all the questions. I want to get back to the Chiefs game. I haven't even checked on it, so I don't even know the score. But I love you guys. Check out TrueTrader. If you're not over there, use the coupon code, I believe, YouTube in all caps. Save you some money. Invest in yourselves, guys. It's a business. I'll see you over there. If not, I'll see you guys Monday morning at the market. I hope it ain't your